back, but hold that thought, Amar. We'll come back and discuss specific stocks as well as take up our viewer queries as well this morning. But let me also bring on board our fundamental guest for today. Joining me, Sandip Agarwal, who's a fund manager at Sowilo Investment Managers. Great to have you on the show, Sandip. Of course, the global landscape has turned extremely volatile. You have Israel talking about retaliation. Although global powers are saying that they will be staying away from that, but of course we've seen foreign outflows, and for the month of April, FII flows have turned negative, right? So here on, would you say that any comeback from the FIIs will only happen after the June 4 event, which is the result of the general elections? Do you think only after that we'll see some bit of a return of FIIs, or do you think due to risk aversion, we won't see FII flows coming back for quite some time going forward?
Yes, yeah. Good morning and thanks for having me on the show. As you rightly mentioned that, whenever there is a event, domestic event and or event like elections, even if the outcomes and the predictions are on the side where investors expect, still, they always want to hedge their positions, or they want to take a big position only after the event, even if it means that they have to get in after 5-7% jump from the current prices. They are generally okay, because see, these are all policy driven things, and broadly, all these large financial institutions and investment firms, they work on policies which are framed for a longer period of time, and the policy documents are made in such a way that all these short-term gains they avoid, but they make policies from a larger frame of things, larger scheme of things. So I think, as you rightly mentioned, they are all sitting on the fence and they are waiting for the election outcome. They are looking for a stable government, whatever it is. But once they see stable government, I think you will see a lot of money will come into India. I think there is no other country in the world which can offer all the things in one go, where political stability, growth, good control of the central bank, currency, everything comes together. So these are rare opportunity, and I think we are having our golden period.
All right. I want to get your thoughts on one point that I want to make. Notwithstanding yesterday's correction, when the advance decline ratio was somewhere around 1:5, data for April is showing that market momentum may be touching a new high. For April 1 to 12, this period, the advance decline ratio was at 1.5. Which is the best for BSE listed companies since June 2020. Would you say that momentum is now making a comeback, and that too in a big way?
Yes. So, if you see the data which has been published by various brokerage houses on the mutual fund side also, we clearly see a trend towards, a shift towards large cap, which has happened in the month of March. And again, I think in month of April, large cap and large size mid cap. So basically the mid caps which have become a bigger size, there is a lot of interest in those names. So I think, domestic funds and large investors are making their position in a way where they want to, play the big theme of infrastructure and other things. And also, surprisingly, another positive aspect is, if you see the manifesto which has been published by the ruling party, it has put a lot of emphasis on infra and digitalization and water and all those things. So I think those things are also the one where I believe that a lot of investment has started coming in, and probably investors will put more and more money there. So I think, as you rightly mentioned, the ratios are going to improve, and there will be short term these things which are global events, not in control of anyone, and they do hit the commodity and the crude, which is generally seen to be negative from our economic perspective. So because of that, broader index might be red or might show some panic for some point of time, but I think broadly the direction should be upward only.
All right, given the global turbulence, which are the pockets that you will be wary of at the current juncture, something that you would completely avoid in the current scenario?
So I think, if really, this escalation happens, as some of the media and some of the experts are predicting, that you never know, in war there is generally no control, or things may start small and then they take an ugly turn. If those kind of things happen, then obviously, there will be impact on crude prices, and if there is an impact on crude prices, then the interest rate sensitive segments can see some bit of challenge, and also some of the sectors which have raw material as crude, those can also see some challenge. So to that extent, we would be little cautious on the interest rate sensitive sector, primarily the banking and the NBFC sectors, for the time being, till stability comes.
The latest round of stress test results has showed that there's been an easing in stress for small cap schemes. But the latest AMFI data shows that the small cap funds did see an outflow for the first time in 30 months. So, do you think here on the investors will shift focus to large cap funds, the safety of large cap funds, so to say, even though the latest stress test results are showing that there could be some bit of easing of pressure for small cap schemes?
So, in the month of March, February and March, where, our regulator has highlighted that there is some risk and froth in the small and mid cap space. At that time, I think there was many of the investors have taken a relook at their stocks, and wherever they thought that the hope story or the story is bigger than the fundamentals, I think there has been some trimming and rationalization which has happened and which is good for the markets. But another interesting, I saw one report from one of the brokerage house. I am not able to recall where they have showed clearly that the way the small cap and mid caps have moved up in last 2 years is in line with the earnings momentum which has happened also. So the price earning multiple for the companies as such has not gone up. Obviously, it looks more heated and has outperformed the broader index, but the earnings have also the earnings of mid and small cap has also outperformed substantially the large cap. So in my view, the good quality mid caps and where there is fundamental return growth and everything, I think those stocks will continue to do well. There could be temporary lack of interest or cautiousness, but once people again redo the maths and see the numbers, and when the delivery happens, I think again there will be a lot of interest which will come back in the small and mid cap space.
Let's talk about specific sectors then. IMD has predicted an above normal monsoon season for the current year, right? And we've already seen a time-wise correction take place in FMCG stocks. Given the kind of prediction that has come out of IMD, do you think this is the right time to nibble into FMCG stocks?
So, absolutely the data is very encouraging. The rainfall, the average rainfall prediction itself is very positive because we still have a large population which is in the agrarian society. So, the disposable income which goes into their hands goes up substantially if the rains are good and the monsoon is decent. So, obviously, all these FMCG names should do well. But, within the FMCG also we have to look at which are the names where the time corrections have been sharp or where they are looking more rational in terms of price. I think those are the ones where the focus should be. So although we run a PMS and we have positions for our client and ourselves, so it is very hard to comment. But I think the likes of Dabur and the likes of Imami and the likes of HUL, they have gone through good correction, time correction at least, and that those are the spaces where there could be something which could be lapped up. So that is the way I would put. Or you can, also play the second derivative. For example, if the disposable income goes up, then the two-wheeler segment and the entry-level four-wheeler segment also could be looked at. The tractor space could be looked at. The housing, the building material space, the cement space, all this could be looked at because when the disposable income goes up, the people would like to have more spent on for their own houses. And also, spend on the two-wheelers and four-wheelers which they would be planning to buy. So I think those are the spaces which should do well.
Okay, what about the cables and wires segment? I was reading a recent report, I think it was a Motilal Oswal report if I recall it correctly, on names like Polycab, RR Cable and the likes. But do you think premium valuations are justified for something like a Polycab?
So it is very difficult to comment on a specific name because when the investors, large FIs and other investors come, they have limited choice because they have other parameters as well like liquidity of the stock and the daily volume and many things, and because of that they end up buying something which is at premium, and they also have more comfort because of long history and all. But let me put it this way that the power sector as a whole and the derivatives of the power and the ancillaries in the power space are going to do phenomenally well over next 3 to 5 years. And in that space, if you see what all are there is cable, there is rectifiers, there is transformer, there is oil which goes into the transformer, there are plates which goes into the transformer, there is the copper wire which goes into the transformer. So all these spaces, should do well. So in the cable space and wire space also, it is very important for people to do more deep dive and find which are the names which are fairly valued, and they are also going to be natural beneficiary of this big growth which is going to come. And while RR and Polycab, these are all very good companies with very good history, but if someone does little bit more work, they will be able to find names which have deep value within this space also, and they will also be big beneficiary.
Want to get your thoughts on the telecom space as well. Of course, Vodafone Idea's FPO will be opening on Thursday, right? But do you think the 18,000 crore rupee FPO can revive fortunes for the telco major? And it has already outlined plans to roll out 5G within 6 to 9 months of this fundraise. Going forward, do you think Vodafone Idea will be able to sustain?
So, very interestingly, two sectors which has not made money in India for a long time, they have now a complete change in metrics. For example, if you see telecom and airlines, there were multiple players and there was deep cutthroat competition, regulation, capex. These are, both the industry, if you see, they have similar traits. They need lot of capex. They have cutthroat competition, pricing, pressure, some bit of, they are regulated as well. From the government perspective, so all these things have led to massive underperformance for both these sectors for a long time. But in this when these tough times have happened, only 2-3 players have survived in each of the space. And I think going forward, this is a duopoly or monopolistic kind of situation where it will be now the pressure at least on the pricing side and all will ease off substantially. Large part of capex is behind. Now the capex which is also required is incremental. So I think these two sectors will do phenomenally well going forward, and within these two sectors, obviously from a market leader perspective, Indigo is a market leader, and on the other side you have Reliance and Bharti, which are market leaders. So those looks very good. But obviously, when the sector does well, then the beaten down players also get a very good chance of revival. And 18,000 crore is a very big fund, and I think the banks will also match a debt portion for that equity. And when that kind of funding is available and the demand environment is strong, economy is doing well, and there is some bit of pricing power which comes back to the sector, I think companies can do really well and they can really turn around. So I think the main thesis is that competition and the weak players are out of the system. So now only 2-3 strong players are there. So I think there is a good chance of doing well.
But you mentioned airlines in this answer, right? So I just want to understand from the overarching theme of tourism, anything that's looking attractive, given the fact that of course there is more push towards domestic tourism, and with what's happening in West Asia, domestic tourism will once again get a boost, right? So here on any particular themes within the overarching tourism theme?
So, in India, tourism has a lot of catalysts which has suddenly come up. There is a lot of tailwinds which has all come together, and it has made difficult for many people to even travel and go for holidays. So, but if you see, there are three things. One is that, as you rightly mentioned, there has been disturbance for last 2.5 years in the whole in Middle East and some parts of Asia, and because of that, domestic tourism has picked up. Secondly, the Prime Minister himself have been pushing domestic tourism very aggressively, and there is a big fan following, and people do get influenced because he is a very good influencer. So that is another thing which is playing for domestic tourism. And third, religious tourism has become a very big catalyst for the growth of domestic hotel industry, the hospitality industry. I was listening to one of the conference in which Oyo Room's CEO was answering that they are having maximum demand for religious requirements in the city of Varanasi and Ayodhya and all. So I think that is another thing which is adding up. So I think in India, hotels and airlines are going to do extremely well, and even railways. And it is a big theme, and it is a structural theme. Only thing is that the capacity to build these are gestation period in hotel industry is very long, and similarly in airline also, after you order you start getting delivery there is a lag. So all these two things has resulted into very high demand supply mismatch, and because of that pricings are becoming very high in both the industry, and because of that there is some discouragement in investors tourists and customers are postponing their travel and all those things. But I think overall, from a thematic perspective, both hotel and airline look very good. The power segment looks very good. The telecom looks very good. Infra looks very good. So we have more sectors which are looking good than sectors which are concerned. Let me put it that way.
Right. Last question, really. What are you making of the data that is coming out of China? This morning we had the Q1 GDP figure coming out. Of course, that was above expectations, but retail sales as well as IIP, kind of missed estimates. But of course, we've seen a good rally coming in the metal shares as well, right? Today as well, we saw a negative open, but we've managed to come back from lows, and in fact, the metal index is trading in the green right now. Do you think this rally is sustainable, given the fact that metals are pretty much trigger happy, right? Whatever data comes out of China, we tend to react to that very quickly. So would you be cautious on the metal pack, or would you say that this leg of the rally would be sustainable and could and investors could look at accumulating metal names now?
So say metals is a commodity, as you rightly mentioned. The cycles are quite volatile and very short-lived. So from that perspective, it is obviously a risky bet. But let me put it this way, that in the worst case scenario, also US will recover from the economy perspective from here on. Once rate cut cycle starts in, then there will be a big kick in demand from the US economy side. Number one. Number two, even if you see China, for example, they are doing everything possible to revive their economy. So they are also the government, the Chinese government, and is very much focused to revive growth. Obviously, they have some other priorities also, but their main priority is to revive growth, and the best way to do that is to give some booster to the real estate, which is one of the biggest consumers of the metals. So in my view, going forward, we will for metal sector, I see that there are more tailwinds than headwinds, and while volatility is synonymous with this sector, but I still believe that there is a lot of money which could be made in this sector, but the investor has to time their entry and exit and have to be very watchful, because this sector is the prices are very volatile, and the stocks move much faster than the prices of the metals. So given that disclaimer, I think we are definitely going to see more demand on the metal side also, and this stock should do well.
All right, that's on the metal space. But with that, Sandip, thanks a lot for taking out time and joining in this morning and sharing your insights with us. Always a pleasure.
Thank you.